Yo, what's up, guys? Christian here with WMG Trading, where we look to take you from confusion to clarity in the amazing world of smart money trading, aka ICT concepts. So, if you've been struggling to understand the concept Power 3, or in other words, accumulation, manipulation, distribution, well, in this bootcamp series, I'm going to give you some actionable steps that you can take to go and study effectively and essentially demystify this powerful concept. So, without wasting any more time, let's jump right into the video. So what is Power 3, right? Like, what is it, right? What's it? Why is it important? Why is it something that every ICT trader has to know? Well, we're going to get into the secrets, like I said. Well, they're not really secrets because everything's out there. You just got to go find it. But to speed up the process a little bit, I'm going to basically let you guys know some of the most important things you have to know about the ICT Power 3 and how to apply it, why it's useful, right? Different components that are needed so you can go effectively study and, walk forward with it. So essentially what Power 3 is it's basically a framework. It is a structure in the way that price is delivered, okay? Or like a process, you could say. It's probably a better word. Pretty much it's highlighting the accumulation, manipulation, and distribution of price, meaning accumulation as in consolidation, manipulation meaning a move that goes against the higher time frame trend or bias or narrative, whatever you want to call it. And then price distributes, meaning it expands or pushes in the intended direction. So that's pretty much what Power 3 is going to showcase to you. It helps you with many things. It helps you with bias if you know the Power 3 dynamics, because you're able to follow price a little bit easier. It's really, really powerful because it helps you navigate and you're able to see things a little bit more clear, right? It's one of those pieces that clears the fog. I know that once I really dug into Power 3 and made that a serious portion of my trading, that it was just extremely helpful. And I hope that as we go through this boot camp, it becomes helpful to you as well, and I'm able to clear a little bit of the fog. Mind you, just a disclaimer, I'm not giving financial advice, and I also am not here to rename things or do any of those types of things. ICT is my mentor, and it's been an amazing, amazing journey, right? Love and hate at some points, but it's been an amazing journey. So I want to, get you guys closer to that clarity aspect of things. Because after all, that's what this channel's for, right? From confusion to clarity. So, like I said, accumulation, manipulation, distribution is basically the main focus as far as Power 3. What does that even mean, right? Like, what is accumulation, manipulation, distribution? Like, okay, this graph is great, but how do I go in and start studying it? Well, for one, your first study tip that I'm going to give you a couple of them throughout the video, and like little drills and stuff that you can go and take back into your charts so you could start bringing out some examples. So the first thing you want to do is go to each daily chart or weekly chart. Let's start at the weekly and then we'll move down to the daily. So with this weekly chart, you could see how there is a open, the anatomy of the candle, right? The anatomy of the candle is what we're going to pay attention to right now. So you can see that there's an open, a low, a high, and a close. So open, low, high, close. That is pretty much showing you visually accumulation, manipulation, distribution without having to go into the chart. So these wicks, right? Many times the wicks, like is commonly taught with ICT's concepts, the wicks are not real price. They are manipulation for the most part. Real price action is inside this candle, right? The bodies, right? So the bodies of the candle is like the real price, and the wicks are like manipulation, aka the manipulation portion of the accumulation manipulation process and Power 3 process, right? They're interchangeably used. They mean the same thing pretty much, right? So you could see that on the bearish candle now, there's an open, a high, a low, and a close. Open, high, low, close. Open, low, high, close, right? So those are your two visual examples for you to visually see Power 3 from this far view, because that's pretty much what we're doing when we're on the higher time frame. We're zooming out and we're just looking at the storyline. Where is big money trying to trade? Well, if you know higher time frame levels, you could start building a narrative around that. We'll get into bias later. I actually have a couple videos touching on bias and what I've learned and how I apply it and how I, do things with it. I could make another video if those don't give you clarity. So there's a lot of different processes your trading plan is going to have. As a trader, you're going to have multiple processes from, fundamental things like, fundamental analysis, top-down analysis process, bias, risk management, models, so on and so forth, right? But yeah, that'll be for like a later video. But yeah, so I hope that little explanation of this diagram and then breaking these candles down, like the anatomy of them, is kind of getting the gears rolling. Okay. So you can go in and you could just start observing. Okay, well, open, low, high, close, open, low, high, close, and start getting familiar with what you're looking at. Just by looking at that, accumulation manipulation can be a foundational portion to your model, right? Like you want to see where is the accumulation, aka the consolidation, where's the manipulation move that takes out some liquidity, and then where is it reaching for? And a lot of times after the manipulation, right after they take the stops, because the logic here is they're running stops. They're trying to position themselves where there's losers at. So if they're trying to sell, the consolidation or accumulation phase is holding price, building orders on both sides. Then this manipulation move, in this case, for a bearish example, would run above buy stops or sell side or buy side liquidity. Sorry about that. Let me go in there and fix this real quick. There we go. But yeah, so in this case, it ran above buy stops and buy side liquidity. And a lot of times there's probably another point of interest above that, like maybe a fair value gap. Could be on the daily, could be on the 1 hour. You know, any PD array that's above these highs, that's logical for price to reach into. It could be an order block, right? It could be, you know, any of those things. Whatever you focus on is what you're looking at, though. Okay, so you want to make sure that that's a key too. Like you're staying focused with what you can see in price. And if you're new, don't overwhelm yourself. Right, we're touching on some basics here. Okay, so yeah, the logic is consolidation, building stops on both sides. Price runs above that buy side or buy side liquidity in this case into some form of a POI or PD array, whatever you want to call it. And once that's hit, you know, most of the time in London, sometimes if you trade the indices, sometimes it doesn't happen in London. It happens a lot of the times in London, right? And we'll talk about the kill zones a little bit as well for completeness sake. But then once price hits whatever it's reaching for to manipulate and pull these traders in, it'll then take off, right? And then go in its intended direction. And a lot of times there's a PD array up here or a point of interest like an order block, fair value gap, etc., or just equal highs. A lot of times it'll go from that, pair those orders to send price into a specific area of liquidity or an opposing point of interest. Like if this is a bearish fair value gap up here above equal highs, price is likely to reach for. First target would be sell side here, right? Second target would be, you know, whatever other lows are there, or a fair value gap, or an order block, or whatever it could be reaching. And then the final target could be maybe a higher time frame level if it's a really extended move. Could be a previous week's low, right? So what I'm trying to get you to understand is this is basically a framework showing you how and why these candles are printing and look the way they look on this weekly chart, specifically on this daily chart. This would be a daily range here. Okay, this would be a daily range. It could be a weekly range, right? This could be like the 1 hour. I don't want to confuse y'all, right? We'll dive into those. I have some videos also touching on the daily and weekly range. As I said, I'll pin it in the card above. But yeah, don't go click on that right now if you don't understand this, right? Because you got to understand the foundations first. It's just like anything else. You got to, you know, learn about the bike before you get on and start riding it, right? So I hope that made sense. And all you do basically for this is you just flip it upside down, right? Can I flip it real quick? Let me see. No, but I hope this diagram, you just flip it upside down and all the logic I just explained, it's applicable in the reverse. Like if it's bullish, it'll run below the low, attack some form of sell side liquidity or some PD array or point of interest below in sell side, or aka discount areas below this. And then it could reach for a premium array or, you know, PD array, order block, fair value gap, or some form of a high. And that would be also, you know, just an extra tip, that also go from discount to then target premium. In this case, we're at a premium above equal highs inside some form of a PD array, preferably. Well, a high is a PD array as well. So, you know, it could just, like I said, run above a high, or if there's an order block or fair value gap, it's, you know, it's adding more spice to it, especially, you know, if there's SMT or something. But yeah, this would go from a premium to a discount, right? So you always talk about buy low, sell high, right? Everybody on the internet, buy low, sell high, right? They can't even explain that to you, what that even means. This old price is higher. Okay, well, what does that mean? Well, price is at a premium price level compared to where it was at, right? And then you could break down the ranges and stuff and get real accurate with it, but we're not going to discuss that here. But yeah, so like I said, in this case, it would go from a premium to a discount point of interest. Okay, and that would be your framework. Another key factor I want to touch on here as well before we move on to a couple other things. I want to introduce you guys to, if you don't know, if you've been studying ICT for a while, you definitely will know what I'm talking about here. The importance of open prices. Okay. Let's just assume this is I don't know, like let's say it's a 5-minute chart, right? So if this is a 5-minute chart, and let's say this is London over here. Okay. Where is the thingy? Okay, right there. Let's say this is London, or Asia is over here. London's right here. Price rallied up in London, set the high of the day, took out buy side, basically pairing smart money sells with willing buyers at a higher price. What higher price? Why would that be important? Well, there's hopefully a PD array up here. And again, one of the highs here, or any of these highs here, those are PD arrays as well. In this case, a premium array. So when price rallies up above there, you want to always, every single day, one of the first things you do when you get on the chart is you want to map out where your Sunday's open price is, your Friday's or your previous week's Friday's close, your Sunday's open price, because you want to have those understood. Specifically for the weekly range power of 3, you want to have Sunday's open price understood. You want to see where that's at, and you want to mark that across your chart. And then, of course, there's a way to use Monday as well, which ICT talks about, but I'm going to keep this as simple as possible. So you can use the Sunday's open price to start observing this for a weekly range, which we'll discuss next. But then let's keep this on the daily range. Okay, this is like pretend the 5-minute. So this price here is the 9 p.m. Pacific Standard Time or 12 a.m. Eastern Time. So as you're looking at price on a daily basis, you're wanting to observe what that does, because you want to always keep in mind what's happening with power 3. Because if you understand or have like a target, you could start layering confluences, like I said, equal highs. Say this was happening here. Let me can I move this over there? No, shoot. But yeah, so if you had this on the daily on the 5-minute chart, and this was your daily range, observing this open price is so powerful, because you're able to identify or start mapping out what could potentially occur in the daily range. Okay. And if you have like a premium array up here, and you have a potential equal lows on the daily chart down here, for example, and we're in a bearish market where price was going lower, if you believe it's going lower and you see price run above these highs, you just simply understanding this basic logic will know that, okay, or you'll start to think like, okay, well, I wonder why they're going up there, right? Like it's going up there. There's likely buy stops up here. Price has been bearish. There's a clear equal lows or some type of fair value gap on the daily, or whatever the case may be down below. The best sells are going to come from above this open price. Okay. And then there's also the 6:30 a.m. open price, which is also utilized. Say this open price was too far away, right? Say we were all the way down here already. Right, that does run the risk. If London was super excited, it does run the risk of a retracement. But if, say, this hypothetical 6:30 open price, AM Pacific Standard Time price, let's hypothetically say we were right here, right? Let's just say we're potentially really far away. Say this was like 50 handles or 50 pips or whatever the case may be. Oh, 50 handles isn't too big, but you get the point. If it's like really far away, let's just say 100 handles or something like that, right? Let's just say it's, super far away. You would then utilize potentially this 6:30 open price, right? You could even use this even if it's not too far away. You want to always have the 6:30, okay? 6:30. And then you also want to have the 9 p.m. Pacific Standard Time or 12 Eastern, 6:30 or 9:30 a.m. for Eastern, okay? For those that are on the East Coast. But yeah, so you would pretty much be observing the daily range, watching how price delivers around these areas. And if you haven't done this before and you're not really familiar with it, like I said, you have to learn how the bike works in order to get on and start riding it. So what your goal is to start observing things. If you have not been doing this in your daily routine, I think I have a daily routine video as well. If I don't, I will have one very soon, and I'll let y'all know when I do post it. But if you have got value from this so far, if you could go subscribe, like the video, tell a friend if this has helped you in any way. Just want to throw that in there. But yeah, so this is one of those things, one of those pillars to, being consistent. It's part of your navigation skill. All right. It's part of you understanding how to navigate price action. And it's a very basic thing, but it's extremely effective. Okay. So I hope this makes sense. I hope these open prices make sense and why they're important. The best sells in a bearish day come from above these open prices, above or at these open prices. Okay. If you have it above both of them and you're still bearish, right? This could also be a market maker buy model, right? If it was a bullish move and this whole drop down could potentially be Like it could potentially be a smart money reversal. Like say this was a bullish PD array and price wanted to, run higher, right? If it was a bullish market, right? That's a whole, another lesson for another time. But you could start to see the accumulation, manipulation, and distribution can look a variety of ways. This is just one way. Let's just stick to the bearishness so we don't get confused here. It could look like this, and that could be the whole daily range, right? Or the other variety could be, like I said, the market maker buy model, right? Or market maker sell model if you flip this around in a bearish market. Regardless, these open prices are very important no matter what you do. Because if this was a market maker buy model that hit a daily fair value gap, that just dug lower into London and then decided to reverse going into New York session, right? This whole scenario that we just talked about, the best sells, if it was bearish, would come from above. That is relevant in a bearish market. The best buys come from below these prices. So if we had this scenario occur, dropping down below these open prices, and we're bullish, that's a pretty, a decent setup, right? And then you'd aim for, this high, this high, this high, fair value gap inside here.Maybe this was an order block. So there's many ways that you'll take this, and over time, as you learn the foundational basics, which we are going to go deep into, and of course, there's a lot of different perspectives, but there's specific foundations that don't change, and then you find your own model, right? Which I'll try to make a video to also help you guys do that as well, alongside the education you already have access to. But yeah, so I hope this makes sense. The importance of these open prices. Your first actionable step is to go and observe these candles. If you haven't already, I'm telling you what you need to go do to start really getting familiar, okay, with this process, because this works with every model too. It is an additional piece of the sauce, okay? If you use the YouTube model, the 2022 model, right, you could easily implement this logic without taking away from that logic. If you use a breaker, maybe this creates a breaker after it shifts market structure here, after taking sell side, after hitting a daily order block or something. Price rallies up, shifts market structure. You could be looking to buy somewhere in there, like I said. So if the logic fits into any model you choose to utilize, whether it's a market maker buy model, whether it is just the power 3 looking for the drop here, you could, maybe you didn't see this and it did go higher. This whole move here that runs above the high and drops down and then continues to go reach down for the original story I was just telling you about the bearishness, you could be wrong and it could totally turn on you, and still you could be correct and make money in the swing, right? You don't got to be perfect, right? So I hope that just kicked the light bulb on too. You don't have to be perfect. You really don't. You just have to know what you're looking for. You got to know why you're going into the market, and there's key principles that you can utilize to build a system alongside all the stuff that is being taught. It doesn't have to, you don't have to apply everything that you learn. You just have to apply what makes sense to you. And I hope so far this has made sense. But like I said, the first actionable step is going and taking each candle and observing what it looks like from the higher time frame. Keeping in mind open, low, high, close, open, high, low, close, right? Observe that these open prices here, you don't use these. So if you're marking the open price, you're going on the lower time frames, 1 hour, 15, 5 minute, and you're going to mark these times out. Okay. And then once you do that, you're able to see the real open price, what's called the true day open price. It's special to ICT concepts. It's special to the way that he trades and internalizes price action. And it's really effective. This is actually the session breaks, I believe, at 2 p.m. Pacific Standard Time, or it could be 3 p.m. Pacific Standard Time after everything is already over. 2 p.m. for us over here in the West Coast, it's already closed. But yeah, this is likely, from what I remember, these open prices are the traditional session breaks, which are at the very end of PM session. Okay. But that's not what we utilize as ICT traders. We utilize these times. Okay. So yeah, I hope that made sense. And then after you do that actionable step, you go into you go in after you mark off this time on the lower time frame, after you've observed what price has done with the candles. Okay, this is a bullish candle. You go down to the 1 hour, you drop down this real quick so you could just at least have it there just to look at it. And then you just observe. Especially if you're brand new, your observations early on is what you need to be doing, like tape reading, like watching price, studying your model, doing all the basic things. You become a master of the basics, you'll have nothing to worry about, literally. But there's foundational basics that people need to understand, right? And this is part of that. Power three. It's basically painting how each candle is delivering, right? Or the logic behind it, right? Sometimes it's just not a good day to trade. But, if you know this logic, it's very helpful. Okay. So after you do that, after you mark down your open prices, you are going to want to observe what occurred at those open prices, keeping in mind that the best sells in a bearish market come from above the open prices, both of them, or one, whichever one you choose to use at the given time. Okay, really, it kind of depends. Don't let that confuse you, because regardless, you want price to be above one of these if you're looking to sell. It's not the only way, right? Like if you could take this entry and that's still good if it hasn't hit the target. But regardless, you want to keep that rule of thumb close to your vest. And then also the best buys will come from below. That's another thing you want to keep very close to your vest because it's extremely helpful. And when you go into the chart and you observe this and you see it, if it's your first time, man, you're going to be like, what have I been missing? Those are some actionable steps that you could take. And now I want to focus on a topic that people don't really choose to emphasize. I mean, ICT emphasizes on it, but it's the importance of focusing on one concept at a time. Okay. You want to focus on one concept at a time. Like, for example, you're watching this video. Well, guess what? You should be only in the chart focusing on one concept at a time. If you're focusing on the 2022 model or, any of the lessons that are going on there, learning more in a shorter period of time is not going to make you a profitable trader. That's just like the bottom line. There's some things you have to go through. There's some growing that everybody has to do on your way to profitability. That's not to say that you can't speed things up with, like, for example, like this video, right? Maybe there's some things, some gems you pulled out of this so far, and we're not even close to being done, right? There's still so many details. And also, if you got some value from what I've said so far, make sure you drop a comment or make sure you like and subscribe. Definitely want to see you around here some more because I got a ton of gems coming. All right. So, this whole channel is made to help you go from confusion to clarity as it states. So I really appreciate the support. But yeah, like I said, you want to focus on one concept at a time. You don't want to overwhelm yourself. This should be a fun process. It shouldn't be, oh, I got to get on the chart. Oh, I got to study. Like what kind of, like what? Like that makes no sense, right? You are not being forced to do this like you would be in college. So it's going to be very easy for the wrong mindsets to remove you from the opportunity. It's just unneeded. So focus on one concept at a time, one logic at a time. Take a lot of notes and just go in and make these little actionable steps. I hope that was helpful, right? The little actionable steps to go and do, right? So focus on one concept at a time. Okay. And when you're learning a new skill set or like a new concept, you're going to want to study that thoroughly before you even consider taking a demo trade, right? Like going back to what I said earlier, you want to know how the bike operates before you jump on and start riding because you'll hurt yourself, right? You'll fall off the bike, cut your knee, whatever the case may be, right? So you got to do your due diligence and, make sure that you're studying and actually putting in the effort and time to actually understand what is happening as far as, what you're trying to apply, right? So make sure that, you do thorough investigation in the charts for a while before you go in and try to gunsling a new concept or anything like that. Yeah, so I wanted to pull up a image that I took the other day. Oh, whoops. I got this candle's blue. It should be red. Let me see if I could find the one that's correct. So I wanted to pull up this little diagram and kind of show y'all something related to what we've been talking about. So this candle's blue. It's supposed to be red. Hope that's not going to confuse you. But you could see the importance of this 9 p.m. open price, Pacific Standard Time, 12 Eastern, as you can see. So remember, accumulation, manipulation, distribution is, basically accumulation's consolidation. Manipulation is like the fake move going against the bias. In this case, it would be a bullish bias. And then you can also see the distribution, which is the basically accelerated move, pumping price off, right? In the direction it's headed towards, to keep it simple. So you could see every day that was bullish followed this wonderful logic. Like you can visually see this extremely easily. I'm hoping, right? If you can't, we're going to try to fix that, right? Because this is like super powerful. And you can see these are the AM and PM session, the little blue lines or boxes or whatever you want to call them. And price is just, getting below the open price in the AM session and then boom, rally, right? Attacking some form of a high or a fair value gap. I can't remember exactly what it was, but it was reach. Oh, it was a weekly fair value gap. This was all accelerated movement towards a weekly fair value gap on the weekly time frame. So you could see how price opens, drops, manipulation, and then price comes up to here, right? And then explodes higher, attacking these equal lows. Okay. So, and you can see price kind of started the move in London, and then New York session was just a continuation. This is when you would also be trying to look at both of the open prices, because it didn't get down below this 9 p.m. price. So does that mean you probably wouldn't have taken a trade? Possibly, if that was your rule, that if it has to be below the 9 p.m. price, that would be your rule. And you know what that would mean? That would mean that this is not your trade. So would you have anything to be upset about? No, because rules are rules and discipline is king in this game. So it just really depends on what you place down, right? It's very flexible, but there are foundational things, like things that don't change, like the 9 p.m. price. That doesn't change. That there's a 9 p.m. price every day, 9 p.m. time every day. There's a 6:30 every day, right? You could be even more strict and think, okay, well, 6:30 was over here opened up for the new day, or new open for the AM session. I want to see it get below that, regardless of what my bias is. I mean, regardless of what price looks like. If I'm bullish, I need to see price get down below that before I'm even considering trying to buy. And if it gets down below that and doesn't present you with your entry model, was that your trade? No. It's just it is what it is. Right? Like this is the mindset you have to start getting familiar with, because not every trade is going to be your trade. Just because it runs away doesn't mean there was an opportunity for you specifically, especially when you're new, right? Especially when you're new, because you have no clue what the hell's going on. Right? So you got to be patient. You have to develop this process. It's just like a business, right? You have to develop the business. There's a lot of different skill sets you need. There's a lot of knowledge you need. There's a lot of different operational circumstances and things that you haven't been able to experience, which you'll have to experience eventually, right? But that's what experience is, right? And this is one of those things that you need a lot of experience with to take it to crazy heights. And that, hopefully that's not discouraging, but that's just the reality, right? You can't go hunting without a gun, right? And even if you had a gun, you'd have to know how to use it. And that takes a little bit of time, right? So it's the same with this. You can have a model, you can have a process, you can know what direction bias is, right? Like what is it reaching for? In this case was a weekly fair value gap. And you could I wish I think time's right there. You can go on January 13th and look, this rally in the S&P or the NASDAQ rallied up to a weekly fair value gap. I'll leave that for you to go do some more extra study. But you can have a model, but if you don't know how to use it and you don't have the rules or experience to really take advantage of it, it's going to seem useless to you. And part of that model has to do with rules. Without rules, you will get completely obliterated. Okay. So very, very important. So yeah, like I said, as you could see, the manipulation, right, consolidates, manipulates, and then pumps higher because it's bullish, right? Price consolidates. This was the sloppiest day, which is why, Mondays aren't the best trading days, but there's still opportunity. Price consolidated, dropped down below that open price. If you're familiar with SMT, there was also SMT at a daily fair value gap. Remember how I was talking about the possible market maker buy model example right up in here? Well, you could see how that, potentially could have played a role, right? Price dug in, like this whole thing could have been a market maker buy model. I can't remember 100% if any of those dynamics were there. It's just, an example, right? But you could see how there is a logic with this. There's a process. There's a systematic way of doing this stuff, and it can be learned, and it doesn't have to take you 10 years, right? Visually, right now, just seeing this, I hope that it makes sense. I hope that it's, kicked on some light bulbs. And mind you, this is the first part to the series. Okay, so there's a lot of things for us to discuss. Right now, it's all fundamental principles, visuals, setting the stage, right? By the time this series is over, I hope you are able to walk away with it, feeling like a master, right? A master at understanding what's going on, not application, because that's going to be up to you, right? You got to go in and do the work, because you got to work hard for this skill set. It doesn't just come because you watched my video or anybody else's. It comes from you looking at what's happening, going and getting your hands dirty, and making yourself immersed in the experiences. Okay. So this was also the high of the week, right? Price pushed up. So in the next video, we're going to talk about, a further amplification of daily, weekly ranges, right? But again, just to, recap what we've learned so far, this whole price action here, all of this is all part of a weekly range. Okay. That weekly range, it was a bullish weekly range, obviously. Remember how at the very beginning of the video, I said you want to mark off Sunday's open price? Isn't it ironic that the low of the week in a bullish week dropped down below that Sunday's open price? Isn't that something, right? Drop down below. What did it reach for? Reach for a daily fair value gap. Price hit that daily fair value gap and then rallied up. Keeping in mind all throughout every day that this specifically was a weekly move. This one also, right? So if you're like a more higher time frame trader, you could see there's an opportunity there if you understand this simple framework. You of course need an entry model that you trust out of the vast number of entry models we now have access to. But you only need one. But you could see how these open prices are super powerful. So now when you're observing the 1 hour chart and from the weekly daily chart, you can now observe the open price on Sunday. That is for your weekly power 3, because the weekly also has, like the weekly time frame, it also has power 3. Power 3 is like it's a fractal tool. Like you can utilize it on multiple time frames, because every candle that's opening has an open price, correct? So, in the higher time frames, I mean, I've heard some things tossed around about, utilizing power 3 on the 15-minute with 15-minute candles, right? With them opening. I'm not like an expert with whatever was being talked about with that, but I mean, it goes that deep. It goes even deeper, right? And we're going to take a deep dive in the next videos. But yeah, guys, I hope you have a wonderful rest of your day, and I will see you on the next one. Welcome back to part 2 of my Power 3 Bootcamp series, and in today's video we're about to go over applications of the daily weekly range, as well as 3 key tips to utilizing these concepts effectively within the Power 3 framework, and how this can help you with things like daily bias, price navigation, and so much more. So stick around to the end of the video as well, because I got a special gift for you guys that you ain't gonna want to miss out on. So with that being said, let's jump right into the video. All right, guys, jumping straight in. So what I wanted to start this off with is kind of like a review of what we just did, right? In the last episode, we pretty much dug into this pattern here: accumulation, manipulation, and distribution. Okay, accumulation, manipulation, and distribution. Well, understanding this at a basic level is going to help you understand what this is, right? Like, what is that? First thing to building confidence in the market, if you lack confidence, is to find something that you can trust, that repeats, that's effective, okay? And this topic, daily, weekly ranges, is effective. The daily weekly ranges, they have profiles, right? There's market profiles if you've been studying ICT for a while, or smart money concepts if they're actually talking about the real smart money concepts, which is ICT concepts. You would have known, or at least heard about, weekly profiles, daily range profiles, or daily profiles, however you want to say it. So pretty much to piggyback off what we've learned so far, accumulation, manipulation, and distribution, starting from this weekly chart, what you see on the right over here, it has to do with this candle. You see where my cursor's at, how it's highlighting it, right? This little look right here, right? You can see this candle. You could see where the little line is. Okay, so this is the weekly range that we will be dissecting after I get some of this explanation of what this is, so you can understand how to follow along and how you can go implement things in the chart to study. Okay, accumulation, manipulation, distribution. What are these letters up here? So in the weekly range, starting from the weekly range, each day has a characteristic inside the weekly candle, which creates the weekly range. Each day has its own daily range, which we'll get into later in this episode. Okay, this weekly range has characteristics for each day. So those characteristics are: Sunday is consolidation, generally. Monday generally creates a consolidation as well, or manipulation against the bias for the week, assuming you know what the bias is, right? And then Tuesday presents the high or low of the week, generally, or Wednesday. When Tuesday and Wednesday presents the high or low of the week, depending on bias, 70% of the time. We can see here, this is a Monday. In this example, we're going to break down in in a little bit. This example here shows us that there is a Monday that creates a low, which we'll break down in a little bit. But generally, Tuesday, Wednesday, rule of thumb, has a 70% chance of creating the high or the low of the week, given the weekly range. Generally, that high is going to form at a specific level, right? Many times it's a premium array on the higher time frame, or premium point of interest, like an order block, fair value gap, run above old highs from the previous day or previous week, or whatever the case may be. We'll get into liquidity targeting at a later time as well. I'm gonna make another video about that, amplifying that topic at some point. So it runs up to hit a premium array, presents the higher low of the week. In this case, this would be bearish, a bearish week, like this bearish candle here. Inside this bearish candle, there's something similar to this. And again, there's other profiles, but this is one of the most common, right? Because basically the logic is, as we discussed in the last episode, price runs up, triggers stops at some form of a higher time frame, point of interest. This is a weekly range, okay? And then it attacks it, pairs smart money sells with willing buyers or buy side liquidity to then attack sell side liquidity, which then ends up targeting lows, some form of a discount higher time frame PD array, right? PD array stands for premium discount array for those who don't know, or point of interest, if you want to call it that, authored by ICT, make that clear. But yes, generally it goes from one PD array to the next. Inside the movement of these candles in the storyline, there's accumulation, manipulation, distribution occurring. And you could visually see that from what we discussed in the last episode. Okay. So if you haven't watched that, you should definitely go click on that and watch that before you watch this, because this won't make any sense to you unless you've, been doing this for a little while. But yeah, so you probably noticed this little Sunday's open price here as well. So Sunday's open is actually literally Sunday's open price. It's been thrown around that ICT likes to utilize Monday at 2 a.m. Pacific Standard Time. And if you have trouble with the time frames or like the times, Pacific Standard Time, which is 3 hours behind Eastern Time. Okay, so just, throw that in there. I've had some questions about that recently. But yeah, so accumulation, manipulation, distribution inside each weekly range, that's occurring. And each day, like I said, has its own characteristics. Sunday, Monday, consolidation, manipulation, generally. Tuesday, Wednesday has a 70% chance of creating the high or low of the week, depending on bias. And then Thursday, Friday generally creates either a retracement. If it hits this discount array moving into Thursday, many times that Thursday is going to create a retracement. If it doesn't and it uses that to reach into it on Friday, then Friday generally presents us with the retracement, right? So there's things that layer together here. Okay. So keeping that in mind, we can come over to here. The bullish example would run down below some form of buy or sell side liquidity into some form of a discount higher time frame POI or PD array on a Tuesday or Wednesday, preferably. Again, sometimes Monday does it as well. Sometimes Monday will present the low, but 70% of the time, Tuesday, Wednesday will present the low or high of the week. Once that occurs, price then pushes up, aiming for some type of premium price level or PD array. Okay. So with that understanding out of the way, okay, again, these Sundays open price, the best sells come from above, touching on what we just talked about in the last episode, and the best buys come from below, right? So and then with this discount array and this premium array above Sunday's open price, and the discount array below Sunday's open price for the buys, right? Above for the sells, below for the buys, that is another layer for you to go in and study, right? When you're looking at these daily, weekly ranges, like this, for example, that presented the low here, it's inside of a weekly fair value gap. Okay. So it's inside a higher time frame discount array, and the low was formed here. 70% of the time it'll form here, but sometimes it forms there. It's just probabilities, right? There's no 100%. So get that out of your mind if you've had that in your mind. You're going to make mistakes. You're going to get it wrong. It is what it is. Okay. But this logic helps you get the odds in your favor when you understand things like this. Okay. And again, we're touching on power 3, accumulation, manipulation, distribution, and how it's important. And of course, now we're digging into daily ranges and weekly ranges. Okay. So I hope this makes sense here. I hope what I just explained about this makes sense, right? So we could see how price, we're observing this candle with this range here. Speaking on this order flow, let's look at Thursday. You see down here, right here, you can see Thursday visually reached up into this high from the previous week's high, because it's a weekly candle. Okay, so the previous week's high was breached. Highs from previous weeks or previous days or even previous sessions, those are premium arrays. The higher the time frame, the higher the confirmation in many cases. Okay, so this was significant. So price ran above that high, took the highs, and the price rejected lower, right? On a Thursday. Remember, if the PD array is hit by Thursday or Friday, depending on which day, a lot of times that day is going to present some form of a retracement if price has been one-sided. You could see how this was one-sided. Came into a premium array, which is this high, took out the buy side liquidity, and then dramatically dropped and then closed on the week here. And you could see the candle, the close here. See where it closed on this gray area is a Sunday, okay? So that Sunday pairs up with this candle that we're looking at, okay? The wick higher, you could see where my cursor is going. You could see on the right side on this 1 hour chart, the high was formed there. The high is this high of this candle. The low is the low of this area here, right? And you could see, let me move this fair value gap real quick. You could see it pairs up directly with that. So you can see the visual that I'm trying to get you to view here. How you can read these higher time frame candles even when you're on the lower time frame. If you understand this skill set right here, this one piece is so important. Okay, it's so helpful when it comes to clarity. You got to like spend some time with it to really understand it. I hope that you're seeing the power of it here. Okay, just off what we've discussed here. If you take just what I've taught you or explain to you guys, point it out to you guys, and you go to your own charts, you will start to see things guaranteed. Can't guarantee you profits, but I can guarantee you'll see some repeatable stuff going on. And it's fascinating. It really is. I think it's fascinating because it's like everything starts piecing together. Okay, so moving along here, right? So I hope that makes sense with this weekly range. And then again, each day has its own daily range associated with it. Okay, so we'll dig into the daily ranges in a second. Okay, so another question, how do you move ahead now and study based on what you've learned from the last video into this video, right? Just so far. Well, you could see the little things here, the little drills here. This is a drill in itself. Go observe each day, mark out the day, and then mark out the open price on the 1 hour chart. Very important that you use the 1 hour chart because it's just less candles and it's more clear. I hope that you can see how this candle, how I'm highlighting this weekly candle, what that looks like. And if you need indicators, I got a video that will teach you about the indicators, how to set them all up, because we're not going to get into that right now. But you can use day separators, okay? And then there's some that can break down the days as well. You just search up day separators. You can pick literally any of them, find one that works for you. But yeah, just for this drill and the drill we talked about in the last video, the couple of drills we talked about in the last video, you don't really need much except, it would be helpful to get a sessions on the chart indicator as well as a day separator indicator, right? I have one highlighting Sunday, right? And it labels the days as you drop lower in time frame. So it's very helpful when you're doing this study, instead of aimlessly looking at the chart, not knowing what day it is, like, time and price, right? Time is also associated to the day of the week, right? And again, like I said, each day in the weekly range has its own characteristics and plays a specific role in the weekly delivery of the weekly candle. So I hope that made sense, right? And we could see how price opens on Sunday, price drops lower, runs out sell side liquidity, right? We could see the storyline that was at the bottom of this candle, right? Opens up, Sunday's open, drops down. What is that? Manipulation, okay? Accumulation, manipulation, not much accumulation really, but regardless, nonetheless, the signatures are there. Price dips below Sunday's open price. Where's the best the best buy in this bullish run? Clearly, it was below the Sunday's open price. Clearly. And you could see how that occurred, right? And you look at this candle here, we're inside the weekly fair value gap, and we're also punching into the midpoint of the wick. That's another important thing as well when you're looking at these candles print. Watch the midpoints of the wicks. That's a fire tip right there, and I hope you go in and look at it because it's very powerful to study institutional order flow just in general and study how the wicks perform, how the midpoints are respected or not. So yeah, we could see how this move in this candle, right, dipped below, rallied up, right? Best buys came from below. We can see Monday here, right? It's just continuing. It was really, really bullish. So these characteristics on Monday didn't really play out, and Tuesday didn't really play out. But sometimes it's going to happen like that. This right here is your rule of thumb when you go into the week, right? And if you want to get real deep, you can go study ICT's weekly and daily range profiles to find the different profiles that occur. This is the most common one, though, that happens more often than it doesn't. Not my own observations. That's what ICT himself says, right? And a lot of people miss these little gems, right? So let me just remind you that, this is a good baseline for you to go in and study and get some serious experience, because you got to realize, like, this game has to do with repetition. If you don't have something that's repeatable, you're not going to last. Like, you just won't. You will not survive. Okay. And that's the harsh reality. All right. Yes, there's people that do it, but with this random perspective that they have. But do you really want to sit there and be in that camp, 90% losers? I highly doubt it. Again, I hope this is clear. I hope you can understand how to go into the chart. You could simply do this and just study what it looks like for the next week or so, or a couple days, however much you want to pour into it. Because the more familiar you can get with understanding, even just this 1 hour chart, translating that to the weekly chart and seeing how that looks, how the storyline of this weekly candle looks, understanding the open prices, understanding the days of the week and their characteristics that they present, how that fits inside the weekly range, how it seeks generally to dig lower into a discount below Sunday's open price to rally up and attack others premium arrays that are above on the higher time frame, right? Or vice versa, if it runs above to a premium array on a Tuesday or Wednesday to attack buy side liquidity, pairing sells, right? There has to be a loser on one side or the other. So in this case, it'd be the buyers that are losing, and then it traps them and smokes them. And if you're familiar, this looks like a familiar pattern here, right? But we'll get into that another time. Okay. But yeah, so again, I hope this makes sense. I'm trying to keep it as simple as possible and applicable as possible. With that being said, let's move on to the daily ranges now. Okay, so let's move this. Okay, so again, all right, let's pull us back a little bit to, okay, so let's go back to our example here that we just looked at. Okay, so you can see each day, Monday, Tuesday, Wednesday, Thursday, Friday. Again, you just need a day separator and a sessions on chart indicator, preferably the one that says session on chart, because you can do it this way. The other couple of the other ones have like this weird like thing here. Super annoying. But yeah, this is super helpful. And again, if you guys need help with that, let me know in the comments and I will make a quick video on that, breaking down how my settings are. I'm on the Pacific, like West Coast. Okay. So the times are a little bit different. Sometimes the times are going to have to be adjusted and I can help with that. But yeah, so each daily candle that you see, or each day here shown on this weekly range breakdown here, as far as each day and the characteristics, so on and so forth. Each day has its own range that works off power 3. So this is the higher time frame power 3. You can see how, if you understand this, or start to see that if you understand this logic and you understand how to map out each day and what to potentially expect eventually, it can start assisting you in predicting bias or framing and mapping things out as far as bias is concerned on the higher time frame, especially if you start from the weekly, which you should be doing. If you trade the YouTube model, the new 2022 situation, you should automatically be doing that anyway, whether you're a scalper that takes 2 points a day or any other type of trader. The higher time frame is where big money's at. They're not on the 5-minute time frame, they're on the big time frames. So where's the big draws on liquidity? Well, most of the time they're going to be on the higher time frame, majority of the time. Sometimes they just play games and chop back and forth, but who the hell wants to trade that anyway? Right? Like, come on. You want large range moves? You frame them from the higher time frame. You frame them from the higher time frame. That's another thing that's been said and a lot of people overlook because they're trying to find entries, and you can't get these big gains, these big huge runners, if you don't have specific elements in place. There has to be a condition set up for that big move or big payout to occur. So if the daily chart or weekly chart is not understood, I hope that statement pushes you to start focusing there more. Because if I was on the 1 minute all through here, not realizing that price dug down into a weekly fair value gap, right, and use this as an inversion, and I understood that this was bullish and there was S&T at the lows and all these other things I can layer, I wouldn't have been able to participate in something like this, right? Or if I didn't realize that this was going to drop, right, or drop lower into this weekly fair value gap because I didn't see it because I spent too much time on the 1 minute time frame, that giant ass move, you would have missed it. And even, even a couple of these days, you could have just caught and got a nice chunk, right? You don't need all of it, but to be part of these big moves, to keep it short, all you got to do is frame things off the higher time frame, right? And this helps you with bias right here, because you can start mapping out something repeatable every week that you hop on the chart. And then as we're digging further into the daily range now, each daily range, you could start mapping out each daily range as well. Okay, so the daily ranges have to do with, okay, so Asia, right? Let's just say Asia's over here, right? These are Asia highs or whatever. London, right? There's also other layers of liquidity that we could dig into, but let's keep this super basic, okay? Like, we're not trying to overcomplicate this, all right? So price can accumulate, just like on this weekly chart, how we have the accumulation, manipulation, distribution, and each day has its own characteristics. Well, on the daily ranges, each daily range individually, they also work off similar logic, okay? Using, instead of each day in the week, it's using each session in the day. okay, throughout the day. So, for example, Asia highs, London, right? Asia creates a consolidation. London generally creates manipulation and a lot of times a start of a move. New York session creates a continuation. But if you're trading indices, very important tip here. Sometimes London will present and do the same stuff that we're used to. Like say we're trading forex or something, right? Sometimes London will do what I'm showing here and create the high or low of the week or low of the day. I mean, high or low of the day. We're talking about daily range. Sometimes it doesn't. And the whole story with the high of the day or low of the day can be presented in New York session, AM, and then PM session can be like a continuation, right? So a basis would be Asia highs and London, right? Whatever's above those areas, like Asia, or above the 9 p.m. price, because for the daily range, the 9 p.m. price, Pacific Standard Time, or 12 a.m. Eastern, because Eastern is 3 hours ahead of Pacific Standard Time. The best sells will come from above that. So what you're looking for is a manipulation above that. If you're bearish, you're looking for price to go up, right? Have you heard that before? If we're bearish, we want to see price run up first because we want to get at a higher price, right? We want to be able to sell at a premium, right? Does that make sense? And then we want to buy at a discount. So yeah, let's say this right here was our daily range utilizing this, like Asia, London, New York AM and PM session, right? And again, keep in mind, sometimes New York AM session, it'll hold out and then London's high would get ran in New York session to present the high of the day, right? So there's a little nuance between different assets like Forex. And Forex, this would be what you'd be looking for. London creating the high or the low of the day. And then New York session being continuation, then London close would be retracement. But then for indices, sometimes London will create it, right? A lot of times. And if it doesn't, then sometimes AM session will do it. And it'll run London's high to then pair their orders there to then send price lower. Regardless, accumulation, manipulation, distribution, understanding these open prices, understanding for the daily range, the role that each session plays before the session you trade in is paramount and important. It's extremely important, okay? So you want to make sure that you're looking at this and digesting this. And let me tell you, if you have a question, please put it in the comments so I can knock these things out. I want to pull you guys up with me. There's a lot of complexities to this stuff, a lot of moving parts, but there's repeatable processes if you pay attention and do the work. Times are rough right now. You ain't got no time to be playing games, okay? You ain't got no time to be procrastinating and making excuses. So make sure that you are pouring into this stuff, and I'm open for questions all the time, okay? And whoever is open for questions, whoever's part of the ICT community, majority of them are nice people. And then, most of them want to help, and we see what's happening. So do not hesitate to ask, especially if you're new and just starting with ICT concepts. If you need help, reach out to somebody. But yeah, so I hope this makes sense. And from a bare bones perspective, it is what it is. Okay, so now let's jump into the daily range on the right side on the 1 hour chart, or actually a 15-minute chart. And then let's show you what to do to study it. Okay, I have this little indicator, the sessions indicator, that shows me where 9 o'clock time is. I don't care about Monday generally. I guess we could look at it, right? 9 p.m. Pacific Standard Time is the daily open price. Okay, I'm going to leave that there. Daily open for this daily candle. Okay, because the daily candle opened, dropped lower, and then price rallied up. Okay, let's see on the left side over here. If you guys didn't take a screenshot of that, please do. Let's see. So the daily range here that we're working with is this daily range here that we can see all the way up. You see where it's highlighting? Make sure you're looking at right here. Okay. So price opened up, dropped lower. What did it do? Dropped lower, created the low of the day. Price rallied away. This is London session. This blue little box here. Okay, let me pull this up. This blue box here is London session. London session did what? Created the low of the day before it exploded. And then AM session and PM session continued. PM session close was here, and then price closed off the high. So this is bullish power 3. So imagine the bullish body of the candle is here, right here. This is what it looks like right here. This candle here, this drop down, rally up. This is the specific candle here, okay? So then now let's move forward. Okay, let's move forward with another one. Keeping in mind this Sunday's open price and what the weekly range looks like, right? And what each day's characteristics are generally. Okay? And it's not going to be perfect, but what we discussed in the beginning parts of this video, those are very, very basic foundational things and good rules of thumb to go in and start actionably studying things and gaining experience, because that's what you need. Many traders are just lacking experience. Okay, you don't need to know every ICT concept to be a savage. Okay, I don't know every single concept. I'm familiar with many, many, many of of them, and I have a ton of experience at this point. So it's like second nature for me to see these things. I don't need 1,000 indicators. I have certain things. Like I said, we'll get into those different time. But yeah, so let's observe where where 9 p.m. open price is, right? 9 p.m. Pacific Standard Time, 12 a.m. Eastern. Okay, so that is right here. There, look in the bottom of the screen. You see it moving right there. You see that little red box right there? 9 p.m. Pacific Standard Time. You could see price did what? What did price do? Price consolidated for Asia. Okay. Manipulation lower. What did that reach into? Price dug deeper into this previous candle. It also hit this fair value gap here, right? Price dug in, rallied away. Also inside this weekly fair value gap as well. You see how things overlap with each other and why these higher time frames are so important? Because if you were here, you probably, and you're just stuck to the 15-minute, you may have thought price is going to reverse, right? You get whipsawed out, like out of every move you get into if you stick on these lower time frames. You want big moves? You got to go on those higher time frames. You got to frame your higher time frame setups, you know, and use entry all the way on the lower time frames. But you have to know how to navigate, and this is a way to navigate. So price digs lower, right? Remember what I said. Sometimes London will present the higher low of the day. Sometimes it will, sometimes it won't. And then AM session will present the low or high of the day. But you can see how that happens, right? The New York session is this green session. PM session is this purple one. Okay, so based on what I've just explained, sometimes London will do it and sometimes New York will do it. And sometimes you will get it wrong. Okay, like it is what it is. Who cares? Manage risk. This is the game we are playing. Okay, there's no freebies here. You have to work, and I'm trying to give you guys some stuff to help you really elevate. So please pay attention. We'll add this one as well. Okay, let's move this one to this open price. And mind you, these red lines, I hope, are helping you identify what I'm aiming at. Because if you were just looking at this chart just like this, imagine you'd be like, well, I don't know. Like, okay, there's these letters. I mean, these numbers. Okay, well, you know, and you say you didn't have any of this, like all these little separators, you'd be lost, especially new. So this is what you can use to utilize indicators to help yourself. Let's turn those back on so you can see, right? Again, price opens up, right? This gray area down here, that's all Asia. So what happened? Price got down below Asia, okay? And then price rallied up. It had a little bit of a, you know, chaotic situation here, right? In London, it kind of ran up. Maybe this was a day you were confused. And you're like, oh, I don't know what's happening. Well, that's fine, right? It's hitting the upper portion of this fair value gap, right? Right up in there. All right, price was chugging on through it, and it was having a little bit of a hard time there. But look, nonetheless, AM session presented the low of the day, just like over here, and rallied up because it was a bullish day. And again, there was SMT at the lows here. There was other factors in terms of bias that pushed price higher and different invalidation principles and processes that were able to be utilized to trust that this was going to go potentially higher. And then also, right, let's take another look at another one. Okay, so again, coming back to this Thursday point, right? Price again, we went above a weekly high, right? The week previous high. Okay, and we'll look at that again. Okay, so remember, this is the candle we're looking at for the weekly chart. Now that we're looking at this Thursday, based on what we've talked about, price ran up above this weekly high, and that's what triggered this retracement. Okay, and then the price, you know, price dug lower, ran out these sell stops, took all these people out that were making money, and then price ended up closing here. And you can see that that's the whole anatomy of this candle here. But coming right back to the daily chart, right? This is what we were working in, right? So you see the weekly. This one weekly candle consists of all these candles here. 1, 2, 3, 4, 5. These candles here created this weekly candle here, right? And again, based on what we've talked about with the days of the week, how those have a impact as far as price, you know, what it does in certain scenarios on certain days. Sunday is consolidation, Monday's consolidation manipulation for the most part. Tuesday, Wednesday has a 70% chance of creating the low of the week or high of the week. Then Thursday, Friday has the potential to have a reversal if a specific condition is met. Okay, if Thursday hits a higher time frame point of interest, order block for value gap, you know, the PD arrays, if it hits that, or if it takes a significant high like it did in this last example, taking a weekly previous high, depending on what day that happens, the retracement can happen from the weekly perspective. And then coming back to what we've just been breaking down here, as far as the daily range, right? And again, Asia creates consolidation. London creates consolidation, sometimes the high of the day, and then also can start a move going into New York. Or for in the form of indices, or from the lens of an indice, sometimes the AM session can create the low or the high of the day. in the daily range. Daily range, okay, weekly range. The daily ranges each day works inside the weekly range. There's specific elements I hope you're understanding here. And if there's any element that we have discussed that doesn't make sense, definitely please let me know. Again, key takeaways is what we've discussed with each day having a characteristic. Okay, the open prices, open price for Sunday, right? The best buys come from below. Accumulation manipulation with that reference in mind, as well as these days and the characteristics. Inside that logic, you want to break down each daily range. Okay, so weekly range, daily range. The daily ranges, Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, all have power 3 generally playing unless it's just purely consolidating. Why? Because they trigger the opposing side to pair their orders. That's why this is so important. They're pairing smart money orders with willing buyers in a sell position, and they're pairing willing sell stops or sellers that are going to lose in a bullish market, so they can put smart money can position their buys below the 9 p.m. price Pacific Standard Time or 12 a.m. Eastern, or above the 9 p.m. Pacific Standard Time or 12 a.m. Eastern. Okay? So again, I hope this makes sense. I hope I was able to drive these things home, visually show you on each candle what they look like, how to how navigating these things, or at least going in there and attempting to study these concepts. And if we need further amplification for this specific topic, we will absolutely do so. So just let me know in the comments down below. And if you got some value from this video, make sure you smash the like button. Let me know any feedback in the comments. I'm always open to improving myself with these videos because it's here to serve you guys, right? So again, the visuals that you see here, they're just so vitally important. But yeah, guys, I'll see y'all in the next one. Welcome back to part 3 of my Power 3 Bootcamp series. And in today's video, we're about to get into backtesting and application of the Power 3 concept, given what we've already learned so far. So without further ado, let's jump right into the video. All right, you guys, so basically the first section, we talked about some basic stuff. I'm not going to read all of this. You can go through and read it if you want, just to get a feel for what part 1 and part 2 is. If you haven't seen those, I highly suggest that you jump into those before you jump into this one. If you're more advanced, you would probably like this one a lot better because we're going to go over a lot of different things, basically pulling all this stuff together, as it says, putting things together. Okay, so yeah, the example that we're going to be looking at is from this weekly candle. And in this weekly candle, we're about to break this down from the weekly and daily range, right? And we're going to use everything that we've learned so far from the last 2 episodes. So again, if you haven't watched part 1 and part 2, I'm going to put a card above this video. So if you haven't actually watched that, you should probably do that right now before you watch this. But if you're more advanced, this should be a piece of cake. But yeah, guys, we're going to look at this weekly candle here and all the daily ranges related. So yeah, let's jump into it. So we can see what day this is, right? This is January 16th, 2024. So if you want to go back into your own charts and pull up that chart and see things for yourself, you can do that. And yeah, so again, we have this weekly open price here. One thing you do want to notice that I didn't label in this video is this, or in this PDF, we have this order block here on the weekly chart. So that also plays a role from this weekly, or upper portion of this weekly candle. Extend that across. It's a sensitive level for the order block. And then you also look at the 50%, and we could see how from this, it was respected and it just wicked below, meaning that, you know, there's reason for us to keep going higher. If we would have broke down below this low, or if we would have, you know, even reached down here quickly and smashed through the midpoint, right, that would have likely indicated that we're probably going to reach even lower, potentially this low and this low, but that didn't happen. So yeah, moving forward, you want to keep this high in mind from the previous week right here, because this high and this high for this candle was the draw on liquidity. And we're going to actually get into something at the end of the video that discusses how you could have potentially anticipated this high forming as well. So you want to stick around to the end of the video to see what that tactic is. So yeah, here's a daily view now. So remember the weekly candle we were just looking at, right? A wick lower, right? A wick lower into this order block. open, dropped below the open price on the weekly, and then you could see price rallied up, right? Accumulation, manipulation, lower to a discount to then rally higher and attack the highs, right? Like I said, keep your eyes on this high from the weekly candle, okay? You could see how that was targeted. You could see how this liquidity was layered here, how it did not take out buy side liquidity, and then sell side was taken out here and here, as well as here. So all the sell side was neutralized before price rallied. Why is that? Well, based on what we've discussed about Power 3, smart money likes to accumulate its orders below sell side liquidity, specific sell side liquidity points at a discount below the weekly open price, to then pair their significant large range buys with sell side liquidity. Okay, because there has to be a winner and a loser, right? And in this case, the buyers were the winners, and the losers giving the other side of smart money's trade was the sell side liquidity. You see how this didn't get tapped into. Another observation you could see is this fair value gap here, this inversion fair value gap, which you acted as support. And if you break this down with a fib, you could see that there's the 25, 50, 75% level. Price wick through, but it hit the low of it, and then it came off of that low, failing to break into here, right? So that's showing strength, right? And this was invalidated when price came up here, right? And there was a whole process with that, which I'm not going to get into right now. But yeah, as I said, sell side liquidity paired with smart money buys. Previous week's high was taken out, and then also this previous week's high was also taken out. So previous week's highs and previous week's lows, you always want to have some type of understanding of where those are at, because those act as liquidity targets. And I gave you guys a PDF showing the significant liquidity pools that you can go ahead and start studying. It's not a, it's not a like a holy grail or anything, but it is very, very useful, right? It helps you with price navigation. So definitely go download that PDF from part 2. Okay, so me switching to this, I hope I didn't lose you, right? Because this drop here on this daily chart is this low here and this drop. And remember those 3 layered highs that we saw right here? 1, 2, 3. I mean, you could even say 4. Well, if we go to this chart, we could see that 1, 2, 3, 4, right? 5 actually from this view. 1, 2, 3, 4, 5. Okay, so price dug lower. Here's the pairing of orders down here to the sell side. So they drove price down. What is that? So here's the open price. Here's the Sunday's open price. That's the weekly open. Price dug down below. Where's the best buys located? Best buys are located below Sunday's open price for the weekly range, right? Like we've discussed. You can visually see that, right? It dropped down to a PD array. Okay, a discount PD array. What discount PD array from this perspective? It dropped down below significant lows, right? Sell side liquidity. So it paired their buys with willing sellers below sell side liquidity. And then it had layered highs, which is buy side liquidity. And then of course we have the previous week's high. So we have layered highs here, as well as a high here that was also layered. Okay, so this is also the previous week's high that I was talking about with this one as well. Okay, so we have 2 previous week's highs. We have 3 layered highs, as well as a 4th one as price dug lower, pairing sell side liquidity with smart money buys. And then price gave us a failure swing here. So Tuesday, Wednesday has a 70% chance of creating the low of the week or the high of the week. In this case, it's the low because we were in a bullish market. So I hope that makes sense, right? And if this doesn't make sense, you need to go back and watch the videos. So again, I have that pinned. I'll pin it again right here, just so you guys, if you missed it, right, you're not going to miss it this time, to go back and watch that if this isn't making any sense. Okay, so digging into further context, okay, we see how price dropped down to a discount array. Okay, what's that discount array? Well, it's the sell side. And if you go to the 4-hour chart, which I don't believe I do in this PDF, you could see how there's a 4-hour fair value gap as well. Okay, and price, I don't know why I put order block there. Sorry about that. But yeah, there's a 4-hour fair value gap. You see the midpoint was beautifully respected. That's algorithmic. On Tuesday and Wednesday, price also dug, like I said, below the Sunday's open price. And then we see an aggressive run. Okay, and when we get into the daily range, we're going to break down each of these daily ranges within this weekly time frame. So just take this into context, okay? Just looking at this framework, can you see the YouTube model anywhere? All right, ask yourself that question. Because if you can, and you know that this takes a little bit of time, we just framed
this potential buy scenario in a bullish market from the 1 hour chart, you could have entered wherever your model is showing. Okay, in this case, the run-on stops was here, all right? Then we have a hard shift in market structure with a failure swing at a higher time frame discount array in a bullish market below Sunday's open price. I hope that is kicking some lights on in your head, because and think about it, this is a bullish candle. Okay, this is one big bullish candle. Imagine the open price is here, so the flat low part of the weekly candle is here. Remember how we looked at it from the week? I'm not going to go back, but remember how we looked at the weekly candle, how it wicked lower into the order block, and there's also an order block on the weekly, right? But I didn't mark that. Just remember that was there, or rewind in the video and go look at it. But just think about it, right? Price dug lower into a discount array, just as was described in the last video, okay? And then price rallies away, aiming for, at a minimum, these highs, or even at a minimum this high. You could have entered here, price ran up here, and there's your ends YouTube model from ICT. There it is right there. Boom, and you're done for the week. Just think about it, right? You don't have to make this complicated. But this is the 1 hour chart, and we could see how this logic is in effect. This is the bullish power 3. So if you have any questions about this, please leave them in the comments. I'd be happy to get back to you about those questions. But I hope this is making crystal clear sense. We can also see how this New York AM session created the low of the day. Here, you see this green. I hope this thing isn't getting in the way. But you see this little green area right there, where the little bubble's at? That green area is AM session. In the previous video, I talked about how London session many times is the creator of the higher or low of the day for daily ranges. These little things in the chart, these are the time windows, right? The red is like the 9 p.m. Pacific Standard Time or 12 a.m. Eastern for the daily open, which is where these are pinned at, right? This is for this day on Tuesday. And we'll get into this deeper, but I just want you to see, like, just visually right now, because there's context to it. So the New York AM session sometimes creates the low like it did here for the day. And sometimes the London session creates the low for the day, right? Depends on the context, depends on what's happening in price action. And we could see how the low generally forms in one of these two areas, okay? Don't overcomplicate it. Yes, you're not going to be perfect, right? Admit that to yourself, like we discussed in the last video. Admit it to yourself. You're not going to be perfect. You're going to miss it. It's not going to make sense sometimes. Things are going to be really sloppy, maybe in a consolidation. But nonetheless, you got to be flexible, okay? And aware, and you got to be observant, okay? And be willing to accept that you will be wrong at some point, right? You're not going to be perfect, but this helps you get right more than you're wrong. It helps you navigate price. Okay, so I hope this makes sense, guys. So yeah, there's an entry here that could have been taken with the YouTube model. Price rallied up here. We could see how price took out this low here. We're going to dig into this portion of price action a little bit as we move along. But yeah, discount to premium for targeting, okay, for framework, right? Manipulation lower. Tuesday, Wednesday creates the low of the week. Rallies up. We have clear engineered liquidity here. And we also had this previous week's high. And again, later we're going to discuss how we got up into here. Okay, so let's move forward. So like I said, we have engineered liquidity, right? And that acted as a magnet after price paired sell side liquidity for smart money buys here inside that 4 hour fair value gap, as well as, remember, this was the wick on that weekly candle that wicked into the 4 hour order block that we just looked at. Okay, and if you're confused, go back and look at it, right? You can also see how this Tuesday move dropped into this order block here, right? As well as an inversion fair value gap. And then price rallied up just to take these stops out, and then it slammed down lower again. That all happened in AM session. But think about it. Run on stops here. There's a shift in market structure here. Okay. And then price rallied up. That's a move in itself to try to aim for this. So even if you were still looking for this buy and price didn't come down here yet, that was an opportunity too, trusting the bullish bias, because nothing's changed for bullishness. Your bias shouldn't switch back and forth like constantly, like longer term, like, sometimes there's retracements in bullish markets, so that would make price on the lower time frame drop, reaching down for, again, some form of a discount PD array in a bullish market. So that's what happened here. But that's also a way you can frame counter trend moves, which I'll discuss in a later video. Okay, so I hope all this stuff makes sense. So what we're going to dig into now is the Tuesday. Okay, so this is the Tuesday price action here that we're going to dig into. right? And if I lost you, just rewind real quick and look at the time frames and sit and study with it for a little bit, right? Like study what these candles, you should be looking at these moves as bigger, higher time frame candles being printed. The open price helps you identify that because you get to see where the candle starts, which is the open price, right? On those daily or weekly candles, right? The daily candles specifically for, something like this, because you could see that daily opens. So these little groups of price delivery, they are creating daily candles. When I look at this, I see daily candles. Okay, the whole 1 hour time frame, I see a weekly candle. Okay, so when you're on those lower time frames, keep that perspective in mind. It's very powerful. So let's move along. So we could see how Sunday and Monday was pretty sloppy, right? Here's Sunday, here's Monday. Monday was also a U.S. holiday on this day, which was, I believe, the 15th of January. We can see how it was pretty sloppy. And remember, from the weekly breakdown of the weekly range, Sunday, Monday creates consolidation manipulation. We anticipate that. Okay, Tuesday, Wednesday creates 70% of the time, the high or low of the week, depending on bias. In this case, it was bullish. And if we hit a higher time frame array, we generally can create a retracement. Okay, so that's a rule of thumb you should have on your desk constantly. Like, you should always be thinking about that because that's a common characteristic. Okay, and again, just to highlight once again, Tuesday created the low of the day in London. All right, Wednesday on the other slide, we saw how Wednesday creates the low of the day in New York AM session. So I discussed both of those perspectives in the previous video. Right. So again, if you're confused, definitely go watch those part 1 and part 2 again, so this can make more sense. Right. But yeah, I hope this is making sense for those of you that do have a slight grasp on this. We could see how this is the open price. We could see how this was a bullish candle. Was a bullish move, or actually I think this was an indecision candle, right? Because here's the open, and somewhere over here, one of these candles is the close. I can't really see the time. We do have the end of the PM session here, which is at 1 p.m. PST or 4 p.m. Eastern. So sometimes it trades like half hour after, but yeah, the close is basically right here close to the daily open price at 9 a.m. Pacific Standard Time. So that's an indecision candle. That's a wick lower and a wick higher. And the body was non-existent because the open and the close is really close to each other. So you can imagine the doji that was probably created. Okay, right? So now we're going to dig into further details as far as this Tuesday is concerned. Given the whole breakdown that we've done already, right? We've broken it down from the weekly to the daily to the 1 hour. Now we're on the 15-minute, observing each daily range within that weekly range we looked at from the 1 hour chart previously. Okay, price dug lower, came down into a higher time frame discount array, right? Here's the open price right here. Price shot lower, hit a fair value gap to the left. All right, and then price rallied up, shifting market structure here aggressively. There's 2 shifts of market structure. And maybe this didn't make sense to you. That means it's not your trade. This buy right here wouldn't have been your trade, so you would have nothing to be upset about. Right? It has to make sense. It has to be able to be broken down and understood by you. Otherwise, it's just not your time to trade, right? There's a time and a place for you to take a trade. And if it doesn't make sense, the current condition, you need to practice discipline and sit out, because that's the main thing that screws everybody over, right? Is you're trying to get in a trade just because you're sitting at the chart. This isn't like a job, okay? You clock in, sometimes you're not going to make money, right? You don't just show up and because you spent time, you're going to make money. You got to transfer your mindset into something different, into a trader mindset, and sometimes you won't make money. Sometimes you will lose money. It is what it is. Okay. But this logic again helps you narrow out where the best buys are below the daily open price, below the Sunday's open price, and the best sells above, right? So in this case, we could see the best buys came from below. There was a discount array, aim for a premium array, right? Discount array. Premium arrays are these highs or this fair value gap. All right. Maybe you didn't anticipate. Maybe you thought Tuesday would have been the low of the week. That logic could have got you into trusting this. Although it did turn around and dig lower one more time, it didn't do that till the next day. So maybe this does make sense to you. I hope it does. Right. If this first example makes sense to you, comment in the comment section. Say the first example made sense to me and explain why. Right. Explain why to me. okay, or any other comments and thoughts and concerns you have. Okay, so yeah, I hope all this makes sense. So let's move along. This was a bullish power of 3 in in this list of examples. So again, I want to come back to some visuals here. I want to come back to this chart, daily and weekly ranges, just to remind you and really drive this home, because I swear to you, just like I said in another video, this is so powerful and so helpful. Like, this one piece is so important. At least it was for me. It may not be like that with everybody, but this one piece was so brought me so much clarity. This one piece brought me so much clarity. It's just ridiculous. Okay, from just reading price on lower time frames all the way to the higher time frames and understanding the story. Some things will make more sense for other people, and not everything is going to resonate with you. Like, I don't generally trade the optimal trade entry, right? I mean, I see it, right? But that's not the thing that I resonated with. And there's a lot of people that resonate with it. I understand it a whole lot more and can execute it now, but it's not my main go-to, right? I use breakers, market maker models. Power 3 is constantly involved, right? I use continuation variations of my models, because every model you have as an ICT trader has a continuation model basically incorporated in it from what I've studied and seen. Breakers have it. The YouTube model has it as prices running away. Like right here, prices ran below this low. There was if you go to the 1 minute, you could see there was another swing high here. It shifted. And then inside this candle, maybe there's a retracement back into a lower time frame fair value gap. That's a run on stops, shift in market structure, and then a continuation variation of the YouTube model inside a kill zone. Okay, I hope that made sense. And the same goes with breakers. Same goes with, whatever move you're trying to utilize. But it just matters what you're comfortable with. Maybe you're not comfortable when price runs like this. Then that's not your trade. Then that's not what your approach is, right? You have to be able to identify these things. And again, that's one of those things that takes time. It takes time. That's why you can't master this in a week, in a day, from one video. Even from my videos, if you just watch them and you don't apply them and start and practice, it's useless to you. You waste your time, because there's vicious, amazingly intelligent minds in this game that are here to take your money, and they're ruthless, right? And honestly, in the market, if I have an opportunity, it doesn't matter who's on the other side. I'm getting my bag. I have responsibilities to take care of. Okay, so it is what it is. It's you either kill or be killed, right? You're either prepared or you become a victim, and we are victims at the very beginning. We are victims in this industry at the very beginning. I lost like 12K the first year, not knowing what the hell I was doing, right? After 4 years, I've been able to gain clarity, right? And I've been able to be consistent. I've been able to, help others and do these amazing things. Okay, not a millionaire, but regardless, I can be in the market and find consistent setups, and I prove it. Okay, I've proven it on this channel, and I've also proven it many, hundreds of examples, maybe even more than hundreds, maybe thousands at this point in the last 3-4 years of examples of on point bias and everything. Okay, and all of these components play a huge role in my ability to do that. Okay, and anyone that I've helped, or anyone that I know that trades ICT, they understand this, that are consistent. They understand these things because this is the market. There's even deeper breakdowns that I'm going to probably break into at some point for amplifications that'll teach you about this and in further detail, like things that have to do with dealing ranges. There's so many different things that you can utilize this for as well. And like I said in the other video, this looks familiar, right? This is a breaker, right? In many cases, this is a breaker. Right? This here on the 1 minute time frame, it could be a market maker sell model, right? In this little fractal example in price. Okay, and we could discuss that later. But yeah, I just wanted to bring this up so you could see this again and understand this, right? Asia, London, right? It's generally, trading indices. Sometimes it happens with the high or low of the day. It happens in London. Sometimes it happens in New York AM session. Okay, and then many times New York session is a continuation. We also have these two open prices. Okay, we got the 9 p.m. Pacific Standard Time, and then we also have the 6:30 a.m. Pacific Standard Time for the New York Open. The 5:30 time that you hear, or 8:30 time that you hear, that's a bond yield open for the market, the bond yields. Okay, and that's when ICT says to start your hunt. Okay, be on the chart. It's like you have to clock in at that time. So don't be confused about all these open prices. Just write down their use cases. These use cases have to do with analyzing the daily range and where the best buys and best sells will come from, depending on bias. And then the Sunday's open price has to do a similar thing, but on a higher time frame perspective for the weekly range. Now, and these are for the daily ranges. Okay, so I hope this stuff makes sense. I have gotten a lot of questions in the last couple of days, and I feel like, you know, it's a lot of it has to do with a lack of application, right? It's just I hear the video and it's like, okay, it seems kind of complicated, but you haven't went in and actually got your hands dirty as much as you should have, right? Or maybe you just heard this and you just haven't had a chance to, right? So don't let that confusion scare you or make you feel like, oh, this is impossible, or oh, this and that, because it's not. I promise you. Okay, and that's why I'm here. I'm trying to help as many people as I can reach clarity, right? As it says, the you know, the lingo, right? Confusion to clarity, where confusion comes to die. Okay, so yeah, I hope this is clear, right? Make sure you take a screenshot of that. Okay, so moving on, we could see how, you know, this is a Wednesday. Okay, so let's look at this arrow here. This is a Wednesday. We're going to dig into the Wednesday. Wednesday created the low of the day inside this New York AM session, as we just kind of went over. And then we also can see how Wednesday also led to the low of the week, right? And remember from the other screenshots, this was a higher time frame order block. It was also a higher time frame 4-hour fair value gap that price dug into, and then it respected it. Here's the shift in market structure above this high after a run on stops, pairing smart money buys with willing sellers to then take profits where buyers are at, right? So they sold off their, you know, they pair up buys with sell side to then target buy side, or vice versa. They pair up buy side to target sell side, right? So they enter here, offload positions here. And again, this is the previous week's high. So let's move on. So digging a little further into the Wednesday price action on the 15-minute from the 1 hour, we could see again, I highlighted the weekly order block. I mean, the weekly fair value gap. Sorry, that mistake is there. Hope it doesn't confuse you. This is a fair value gap. This isn't an order block. Okay. Well, it is. It's a weekly order block, but you know, it's not in this. This isn't the outline of that. This is a fair value gap. Okay. And you can see the midpoint. Price respected the midpoint. It also respected the 25% of it if you broke that down. And again, just to remind you, again, smart money buys paired with 1 hour time frame sell side liquidity to then set the low of the week, as well as in the daily range, set the low of the day. We could also, I mean, you could argue and say that, you know, this also set a potential high of the day because this was it was bearish to get price down into. That's a higher time frame. It's just a retracement, a lower time frame retracement within a higher time frame bias context, okay, or narrative. That's why it's so important to understand the higher time frame, because maybe you saw this and you probably, you know, if you were stuck on the 15 or the 5 or whatever lower time frame, you probably would have been thrown off, like, oh my God, like it's selling off, and then you get screwed over because it turns around because you're on the lower time frame. You're not seeing the real story, you know, and the navigation is just not there yet, and that's okay. You know, watching videos like this and spending time studying things like this, that's what gets you there. It'll help you get there, you know. And again, I'm here to help. So if you have questions, leave them in the comments down below. And if you're getting value from this video, I really appreciate it if you could like, comment, and subscribe, and share the video with anyone you think this would be helpful to. It really helps the channel out, right? Channel's pretty small, so any support is definitely appreciated. So, and those who appreciate me thus far, you are truly appreciated, and I thank you for your trust and your time. So yeah, you know, this drop was manipulation just to get us down to the discount array to pair smart money buys with willing sellers below sell side liquidity. Okay, so moving on to the next one, we could see how the engineered liquidity was taken. Again, like I was talking about earlier, this is a beautiful example as well of the same logic that happened over here, happening over here as price is moving. So if you missed this setup, who cares? Keep your mind on the rules. Run on stops, right? And then dig down into the lower time frame and go study here. I'm gonna leave that for you to do. Go study in here and see if you can find any models that you understand, right? Or maybe your model, right? Maybe your model is showing up in there. Of course, this is the Thursday price action we're gonna get into. So here's the Thursday price action. Well, okay. I guess it already showed up, right? There's probably even a sooner entry here. Okay, there's probably an even sooner entry here. But the same logic that we used over here inside this 4-hour fair value gap is the same one that we're using here with this 1-hour fair value gap. Price dug down below, pairing smart money buys, the continuation buys, with another previous week's high above here. And then price, paired those sell side orders with buy side smart money buys, shifted market structure here. And even if you would have entered here and put your stop down below this fair value gap, you could see there's the inversion fair value gap. There's these two fair value gaps here, and price, rallied up. I mean, this here on NASDAQ is like 20 points. Look, from, somewhere in here, we have 17,100. This high up here is above 1720. So that's already 20 plus points right there. So even this is a decent move inside PM session, Whoops, let me go. So yeah, even this, like I said, this is even a decent move as well to end the day. Okay, so you could have got there, or like I said, if you go to the lower time frames, you'll probably see this happening sooner down here because price is fractal. So again, I hope this makes sense. And sometimes when price is predisposed to go higher faster or move lower faster, whatever the case may be, sometimes it's not even going to really do much of a retracement. This was in a hurry because, it was reaching for something and it was super excited. DXY was super bearish. Oh, DXY in this case was pretty consolidation driven. But, nonetheless, we could see how it was excited to try to get above the previous week's high and create new all-time highs. So yeah, engineered liquidity was taken. Previous week's high was then attacked. And then we can also see that the 6:30 open price was significant. The 6:30 open price was significant. AM Pacific Standard Time, when price is accelerating, right? And it's kind of far from the open price on the daily. We could see how the 6:30 open price acts as the same power of 3 reference, right? Price got down below that. The best sells or best buys came from below that inside a discount array to then target a premium array, right? This high is a premium array. This fair value gap is a premium array. This high is a premium array. Okay, if you go from high to low, you could see that, right? And you could see the premium and discount. From this low to that high, you could see equilibrium is somewhere in here from this low to that high. You could see equilibrium was somewhere around here, so it drove itself into a discount, and then price rallied up. Okay, so yeah, when price gets above all-time highs, it's kind of difficult to determine, where price could potentially reach for. And like I said, I'm going to show you guys something that maybe you haven't learned before, right? Or maybe you have, because ICT has talked about it. But I'm going to be another reminder of another tool that's extremely valuable. You see this 17,800 price? Well, all this stuff considered that we just discussed, right, as far as power 3 is concerned, and just the dynamic of how price is delivered. Once we got up above this previous week's high, that was my initial target for the week anyways. Okay, so if it would have been yours too, it doesn't matter how far it goes. All you got to do is get from discount to premium, and that's your range and you're done. Right? You could keep it easy. You don't got to be pressurizing yourself so much. All right. But once we got above this high, how could we have determined how price, like how far it could have went? Well, to get specific levels, this high to this low was when price started running, right? And then that shift in market structure was significant. Okay. It shifted back to bullish, changed its state of delivery. These down candles is also an order block. This is the 1 hour. If you go to the 2 hour, you could see how this is a bullish order block. Price, kind of played around in there, and the price expanded away. But because we were above this previous week's high, and this is a significant low, right? This is where the move basically started from. We could then start gauging how high price could potentially go by using this price structure here. Skip forward, and then I believe this is Friday, right? So we could see how, the same rules apply, right? We're going to go through this one quick, right? Because this is just, really one-sided. And we're going to get to how this high and the high above it, actually, is one more above it, could have been looked at. And even this high, right? We could even gauge that this high was going to be attacked, right? Okay? With what I'm going to teach you next. So yeah, we could see, right, consolidation, manipulation down below, set the low of the day in New York AM session, and the price rallied away. right? And if you dig down to the lower time frames, you could dig and see if you have any type of moves in there you could have entered. But I mean, just off this, you could see that, if you trusted bias to be bullish still, right, you could have, continued going higher. But once we got above this previous week's high, I was done, right? I wasn't going to participate because you never know. But if you wanted to get a feel for it, what could happen, right? Or if you're in a different situation where highs are trying to be met and you just want to try to be more accurate with targeting, you can use this little method here. Okay, you use that same price structure that I was telling you about, right? And again, you're not going to be perfect, right? You see how we basically could have mapped that out, and then price got all the way up to here, right? And you're just going to see the precision, how insane the precision is. Just using this logic, how price started here, price is rallying, we got above the previous week's high. How can we gauge how high it can go? You can use this where it started, right? The move where it started, if there's a price structure that looks like this. You could just use this order block and just this whole perspective here and then extend price higher. And then we could see how price basically hit all these levels. Boom, boom. And it's not random, okay? Even here, boom, right above the previous week's high. So just, take this piece of information here and just go play with it. Go look around for these types of moves, right? When price does this type of thing and it expands and breaks a swing high and the price just extends, start looking for these types of signatures and then just start trying to gauge, right? Like place it and then gauge and study those levels, how price reaches up into those levels. So yeah, I hope this stuff made sense. So if you have any questions, again, just definitely let me know in the comments. If you haven't watched the other videos, you should absolutely do so because there's so much stuff to cover, right? Like there's so many things you need to figure out. And things can be less complicated than you make them. But yeah, guys, with that being said, I hope you enjoyed this series, and I will see y'all on the next one.